Hey everyone, welcome to Flywheelpod, your number one source for everything Frax, DeFi, and everything in between. If you want to know what's going on in the world on chain, you've come to the right place. This is DeFi Dave, here with capital K, and we're here to help you harness the power of the flywheel. And there's no better or more exciting way to harness the power of the flywheel than with safe leverage. And this time around, we had on two guys from Gearbox Protocol, which is a composable leverage solution to DeFi. And we got into it. We got into the nuts and bolts about how Gearbox worked. And we also got into, just bantering about DeFi and crypto a bit. Kiet, what are your thoughts on this one?
Man, I think Gearbox is one of those really cool primitives of DeFi, right? Like they are the leverage layer, a fully composable leverage layer. And anyone can use their tech. But if you want to tap into their liquidity, then you have to be integrated, whitelisted, approved by the governance, et cetera, et cetera. But I think that, coming from that design space makes a lot of sense. It's where you build a fully composable primitive and let other people plug in. I like that a lot.
Yeah, one thing I appreciate about them is how, they really stay true to the decentralized ethos. They're all on chain, and they're really trying to build a DeFi native solution. So it's really cool, what they have, what they built and what they have in store. And, they're, as Amplice said, they're a team of gigabrains. And, it's going to be really exciting to see what they build in the future.
But dude, here's another point. Even though they have such strong DeFi ethos, they're also not devoid of reality. Right. So they're taking a very methodical rollout of, hey, let's integrate all the safe protocols first. Then we'll slowly go further out on the risk curve. Like they're taking a very tactical approach to their go to market. And I think that makes a ton of sense. Going from 0 to 100 or 0 to shitcoin day one is just, that's not sustainable,
Yeah, no, they're definitely building with the long term in mind. And if you want to keep up with what we're doing here at Flywheelpod, don't forget to like, subscribe, hit that bell button, leave us a comment on, let us know what you think on our YouTube channel. Don't forget to follow us on Twitter at Flywheelpod. Join our Telegram at Flywheelpod. You can follow me on Twitter at DeFi Dave 22.
You can follow me at 0x_K.
And let's get the flywheel spinning. Do you hold ETH but don't know what to do with it? Want to earn those juicy liquid staking derivative yields, but don't know where to start? Well, Frax ETH is there for you. Frax ETH is Frax's native LSD solution, allowing you to earn boosted yields in multiple ways on your ETH. If you want to get started, go to app.frax.finance and turn your ETH into Frax ETH today. Hey everyone, welcome back to Flywheel Pod. Today we have on the Gearbox crew. We have on Ilgiz and Amplice. Gearbox is one of the more interesting, DeFi native money Legos in DeFi. I don't want to give too much away. I feel like if you've been deep in DeFi, you've seen Gearbox around before. If not, really exciting protocol, very useful, and I can definitely see them growing to be bigger as they scale into the future. I'll let you guys introduce yourselves. Ilgiz, I'll let you go first. Can you tell the listeners who you are?
Yeah, hi everybody. So I have PhD degree in computer science and math. For last 10 years worked in different product roles, mostly in fintech and banks. And since late 2016 joined to crypto and helped to build some DeFi projects here in our space. And since February 2021 joined to Gearbox. And responsible here for product stuff and for math and risk.
Cool. And Amplice, what about you?
Hi, I'm Amplice. I'm from Gearbox. I mostly do marketing stuff. Most of the videos you've seen from Gearbox are from me. I also do like articles and tweets and stuff like that. Joined Gearbox, I guess December last year-ish, something like that. And I'm not really full-time at Gearbox, but it's like most of the stuff I do in crypto is Gearbox related.
Got it. I mean, you're on this podcast, so you must definitely have a big part. So let's get right into it. So in your own words, what is Gearbox and why does DeFi need Gearbox?
Let me start, I guess. So Gearbox built what we call this composable leverage. And that's, I guess, one of the best ways to implement leverage that could be work fully on chain, fully composable, so that anyone, whatever people, user, smart wallet, protocol, treasury can use it in the way as it's designed. So it's fully composable, and I guess composability is one of the key feature for DeFi because like it's allows to build money blocks and to unite together and dramatically increase innovation in our space. And other margin trading, perpetual swapping, and different other stuff that built before us have some drawbacks in this because like they could use some off-chain execution layer, like for example DYDX or whatever else. And Gearbox tried to solve this problem and implement credit account. This is our special primitive for leveraging. And we think it's a native way to implement leverage on chain that could be applied later for any DeFi protocols so that it will be enabled for anyone, any programmatic stuff and so on.
Yeah, can you get into what these credit accounts are? This seems like the central part of what makes Gearbox work.
Yeah, sure. Credit account is the latest smart contract. So how it works? Initially, when you open credit account, you deposit some of your initial funds to it as collateral. And then you can put on this credit account some funds that borrowed from the pools. So as a result, you can keep on your credit account X2, X3, X5, X10 money than you initially have. And later protocol have some rules, policies that actually restrict how this money could be used. Because if there is no any restriction, you can just get this money and fly away like some guys from CeFi, right? But
Sayonara. See you later.
But we trust only in code, yeah. So all these rules should be implemented in code. So there are two policies. First policy is list of allowed tokens. So when you swap one token for another or somehow interact with other contracts, you receive some other tokens. And these tokens should be from this allowed list. This don't allow to implement such kind of buying shitty coins that price goes to zero very, very fast, yeah. And second one is we limit the list of contracts that you can interact with. And the reason here is the same, like you should be sure that this contract's not malicious, there is no hacks in it, and they can't be used to withdraw funds in a malicious way from credit account, because credit accounts holds not only your money but also money from LP side. So as a result, we have this design where credit account and these policies that implementation of each protocol checks allows you to hold this leverage assets on your credit account applied to any whitelisted DeFi protocol, and as a result, it's like you get this leverage and use it in the way you want it to use.
And how does the LP side work? So you have credit accounts, people deposit their collateral, and then I guess like LP side, like where do people provide liquidity?
Yeah, LP side, I guess pretty standard. It works the same way as pools work in Compound or Aave. You can put your money in LP and get some passive interest on it, and that's it. Interest rate depends on the utilization of the pool. So if utilization is very high, interest rate will be higher. If it's low, interest rate will be low. So pretty usual.
Yeah, and can you walk me through the process of like, how if I were to use Gearbox for something, whether it's like farming or something else, so I like create a credit account, deposit my collateral. and then there's only certain whitelisted protocols that you're allowed to farm and use, right?
All right. Yeah.
Okay, I got it. And what makes Gearbox different from there's other leverage farming protocols out there like Alpha Hamora. Is it because of the credit counts, or is it because of something else?
I'd say it's because there is no pre-built strategies. We just built a set of rules here, and later protocol or risk team can understand what kind of stuff is like safe for liquidity providers and add it to the protocol, and that's it. So you can use funds on credit account as you wish, and there is no pre-built strategies, and you can implement different, very different logic. Yeah, it could be leverage farming, but it's only one of the use cases. Yeah, so for example, it could be more complex strategies when, for example, you believe in ETH and wanted to long it, and you can use credit account for such kind of margin trading, but as a result, you hold on your credit account Ethereum, and instead of just keeping Ethereum, like usually you did in margin trading or perpetual in Binance or in decentralized perpetual protocols. You can put this Ethereum, for example, and in staked Ethereum or any other farm, and you can combine this farming opportunity with leverage trading opportunity at the same time.
Yeah, so it can get pretty exotic.
Yep.
Yeah, cool. And like in your own words, what does composable leverage mean? And I guess like why have you guys chosen to go completely on chain with everything? From my understanding, that's what GearFi Box is, and like that's how it's structured. Like, what is composable leverage? Like, what does that mean to you? And like, why did you decide to keep everything on chain?
Last question, I guess. Why to keep everything on chain is pretty easy to answering it after all of this CeFi stuff last year. Yeah, I guess when it's on chain, it's like very easy to track, very easy to understand what happens for all the parties in the protocol. Yeah, so using on chain is like a right way to build DeFi protocol from my point of view. When some part is working on some off-chain, it's not very good, and it's the part where some attack vector or some mislead behavior could happen, and it's, I guess, only need some time to figure out how this could be used for different attack vectors. When everything is on chain, it's like very safe from protocol level, and other I guess good opportunity here is like we build this leverage layer, right? And there is no need for us to focus on different other stuffs. For example, if you wanna build some margin trading on top of Gearbox, there is no need to think, okay, we need some liquidity on DEXs. If you wanna do it in ourselves in not composable manner, you should everything built on your side, like from the box. And from my point of view, it's not how DeFi should be designed, because in DeFi, I don't know, Uniswap implemented this DEX and everybody can use it for farm, whatever it else. And it's very good feature when teams can focus on the very narrow space, do it very well, and everybody in the space can use it because like it's a really optimal way to do it. And that's how, for me, that's why composability is very important, and we don't need to focus on all of the layers. We just build this leverage layer, and everybody, protocols, users can use it as it's designed.
Yeah, and
So-
which protocols? Yeah, go ahead, Kiet.
I just wanted to kind of double click into that, Ilgiz. Like, I know you guys currently work with Uniswap v2, v3, Curve, Convex, Yearn, Lido, and Wrapped Steth. Like, are these supported protocols, did they approach you to get added into Gearbox, or did Gearbox just added them because, that's what you wanted to launch with? Oh, did he freeze? Ilgiz, my man?
Ilgiz,
Ilgiz, my man.
did we get rugged?
Damn.
Well,
My question was too
while
tough.
he's frozen, I can answer.
Oh, please do, sir.
So the protocols that are currently integrated in Gearbox, I don't think they approached us, although Ivan is friends with everybody, so he kind of knows everybody already, so it's not a case of you're just chatting, right? But I think the idea is like we wanted to launch V2, especially with things that we consider super safe and secure and have a track record of being safe and secure and like as far as we know, not exploitable, right? Because user safety, of course, is number one. But I think the long-term vision is like, if we can integrate everything that's safe in DeFi or everything that's broadly considered safe, of course, hacks and exploits always happen even under the best of circumstances. But like if every kind of quote unquote good, useful protocol is integrated in Gearbox, then you can kind of think of it as not just a leverage protocol, but the way that I envision it is like a smart contract with leverage, smart wallet with leverage built in, right? Where it's like any protocol that wants to have leverage as a part of their protocol, they don't need to build out that leverage layer separately. Yep. They can just like be like, oh, we'll integrate with Gearbox. Gearbox is super composable anyways, and it's specifically built to do this, to be like relatively easy to integrate with. And then there's your leverage in whatever that protocol design you want. And the good thing is if you have a single source of leverage and you use the credit account system, right, that Ilgiz and Mikhail and Ivan put together, then not only like can you get leverage on every quote unquote good or safe protocol, or your positions in your credit account can cross collateralize, right? So if one thing goes up and another thing goes down, it's not a case of, oh, you're going to get liquidated. As long as overall your overall position in your credit account is above water, you're still fine. And that's really powerful because it drastically improves the capital efficiency of what you can do, as compared to other existing solutions.
So I can have multiple credit accounts and all of those will net asset value will be netted together?
Not multiple credit accounts, but you can do multiple things in one credit account.
Oh,
so
I see.
You could like put one ETH, well, not one, you could put like 10 ETH as collateral into a credit account, borrow like 50 ETH or something, and put 20 ETH into Yearn and put 20 ETH into something else. And those things cross collateralize in the sense that the only thing that matters is your total credit account position. And that's really, really powerful. And that's something we haven't really seen yet in DeFi, as far as I'm aware.
No, that's super interesting. And
Got it.
I love that you guys are this basically middleware for leverage that you can just plug into any protocol. Now, my only question would be this whitelisting, and you guys really hold the permissions on who can integrate with Gearbox, right? Do you kind of foresee that being, loosened or removed in the future, and that anyone can integrate with Gearbox?
So technically, I believe that anybody can already integrate with Gearbox. The only issue is where you can draw funds from when you're borrowing, right? So we have there's only one pool of liquidity right now, right? Because we don't want to fracture our own liquidity. But theoretically, you could deploy your own liquidity and then be like, oh, people can borrow from this siloed pool of liquidity for our particular protocol, right? But the problem is, if you want to use the main source of liquidity, we really need to be very careful that everything is safe. And so for the time being, at least, I believe that the source of liquidity that we have right now, which is just the LP providers, that is not going to be permissionless, because otherwise you could have a situation where, like, I don't know, Sam wants to permissionlessly add FTX as collateral, and and that's happened before, right? That happened to Cream basically, although they're also
Yeah.
not technically permissionless. But if you get like bad collaterals or bad strategies that like can go to zero really quickly, that
remember
becomes a
that.
problem. That becomes a
I
problem in a
yeah.
in a permissionless world. Then you open yourself up to exploits. So the permissionless thing, there are ways to do it, but you have to find your own liquidity basically, and it's not going to happen without liquidity.
I
Got
like
it.
that.
Whenever someone, yeah. Go ahead.
I was going to say, you guys provide the leverage, but it's a BYOL, bring your own liquidity. So I like that a lot. Go ahead, Dave.
No, I was gonna say whenever when someone says Sam, like I have to like think for a sec, like I hope they're not talking about our Sam, like, but it's the other Sam, SBF. you know, there's one good Sam.
I hope for the I think for the next 6 months or so, when people talk about Sam, it's going to be about that Sam. But hopefully in a few years, it's going to be about your Sam, which is a much better
Yeah.
Sam, I think.
Yes. It's
Yeah, I think so.
SKF, Sam, Kaz, Frax. SKF, guys.
SK. Okay. I asked speaking about our Sam, I was wondering, Frax I've seen is starting to get integrated into Gearbox. Is there a roadmap for like a further integration between Frax and even Frax ETH in the future? Like, how do you guys envision, that relationship going forward?
Yeah, good question. Yeah, actually, we see with very, very optimistic with this integration, and I guess that it, of course, could be increased. And also, we think about Frax BP, and one obstacle here is like withdrawal locks, because like Gearbox composable, and we should be sure that liquidation always should be possible to do at any time, and to do it with some locking mechanism, locking design. It's a little bit complicated, but for this we also have some solution, and one of the ideas that we keep in our mind to build separate pools which have some expiration, and for such kind of pools it's possible to implement this locking mechanism, I guess, and mitigate risks that there is need to liquidate some position, and this position can be withdrawn because like it's still in lock. So yeah, I guess there are a lot of different opportunities for integration, and we'll see how it how it's going. Yeah.
Yeah, I mean, to point on what Amplice was saying earlier, like one thing I loved how he described it as this leverage layer on top of DeFi, because leverage is very complicated to build out. There's a lot of risk to consider. It's a lot, it's in a protocol's interest to outsource that kind of, building to someone else that just focuses on leverage completely. And I see the same thing for Frax. Yeah. And like, do you see maybe some integration with like Frax Lend in the future, using like that what they built out and integrating that into Gearbox in the near future?
Yeah, that also could be interesting. I guess they only need to check the use case where users can use it and how they can apply this leverage using Fraxland. That's one of the questions that's not obvious for me for now. Yeah, so need a little bit research from user side, but yeah, it's very interesting.
Yep, got it. And in terms of how Gearbox rolled out, I remember you guys had a very interesting rollout. You had like, an airdrop to like certain users that did like certain things, and it was pretty smooth. It was very well communicated. Can you walk us through about how that rollout happened and like why you guys decided to do it the way you did?
Yeah, sure. Yeah, I guess Gearbox story is something unique in DeFi space according this rollout. And As I said, create account is the latest smart contract, right? When we talked before, the design of Gearbox, and as far as each create account is the latest smart contract, it should be deployed. So it's kind of like a very, very big number of deployed contracts. Now, for example, in Gearbox, 5K create accounts, so each contract should be deployed, and it's a lot of gas, and there is no make sense for us, for example, to spend this money. And our idea was like, okay, we can create this community-driven deployment, where actually community who thinks that Gearbox is something valuable, they can come and take participation in create account mining event. So our goal is like to filter some users who could understand the value proposition of Gearbox, who actually like not just dumpers, but who can make something valuable for protocol. So we check at people who like old OGs for DeFi protocols, who take participation in governance, in votings, and so on, like who actually participate in the growth part of any kind of top protocols that available in that time. So we did this pre-list. I don't remember exact number of how much users in this list, like 50K or even more. I don't remember. And they can deploy this create account, and create account after deployment goes to the factory that protocols has. And yeah, so it's like community-driven deployment. We as initial founders deployed just one part of the protocol, and other part was deployed by community. And it's also very, very beneficial from my point of view, because we've got as a result a big number of people who actually like put their money in protocol and do something valuable for it. And these people initially voted for what kind of pools should be in protocol, what kind of assets we wanted to add. So everything goes like from the day zero, community driven. So with that, we like DAO from the zero day. All decisions were taken in DAO format from the beginning. And later, yeah, I guess like as a result, we received a very, very active community, very, very active governance. Like usually, like one key people take participation in governance votings. I guess for such kind of early protocol as Gearbox, it's pretty good number and pretty good activity for governance stuff. Yeah, that's what. Yeah, that was one phase on the launch. Yeah.
I was going to say people had to earn their tokens. They couldn't just like do a simple like, oh, let me do this like one trade, or let me do this like one thing, and then just dump. But like no, like they had to like go out, perform this like certain action, like actually use the protocol how it's meant to be used. And it was a filtering mechanism of like, okay, who's actually going to be active in the community.
To be honest, like gas went so high during the credit account deployment that I'm pretty certain, at least on one of my wallets, I'm going to be losing money on the credit account deployment because the amount of tokens you got. But I paid like a ridiculous amount in gas, and that was when ETH was like much higher as well.
Yeah. How does Gearbox? Yeah, that's going to lead me to my next question. How does Gearbox think about gas optimization? Because everything's on chain, so that gets definitely expensive. So how does Gearbox account for everything in terms of gas?
Well, the way that I think about it is that our devs are the most gigabrain devs on the planet, and they'll figure it out. That's my strategy.
From gas perspective, our design, I guess, pretty good because like credit account, as far as it is a latest smart contract, there is no big overhead to use it interacting with any DeFi protocol, because like every asset you already keep on your credit account, so it doesn't matter you trade with your own wallet or with credit account. It's like the same ERC20 transfer, for example, and there is no need to calculate all balances. Like for example, when you have some one vault and every user has some share on this vault, and when something changes in this vault, you should like recalculate a lot of stuff. It's more complicated to do it in that way. And in Gearbox, it's very simple because like it's the same wallet. It's just smart contract wallet. And it's easy to check what kind of asset you hold in your wallet. You can just go to Etherscan and see, okay, this is asset number one, asset number two. You can see all your trades, all your position already on Etherscan. There is no to do some explorer from our side, yeah, because it's everything works as for original usual wallet, but the only difference that it's smart contract and all operations happens using this smart contract. So something go out from this smart contract, something go back to this smart contract, but it's the same transaction as you did from your usual wallet. And there is another important stuff, I guess, that in Gearbox there is no need even for interface, yeah, because for example you can go to original Uniswap interface, connect with Wallet Connect, your smart contract credit account, and make all transaction as you usually trade on Uniswap. And Uniswap and Wallet Connect understands that it should route money from your credit account, not from your original wallet, and everything work very natively.
Got it. And I feel like the smart contract wallet hasn't been used too much yet as a general Ethereum primitive. Like the only two times I've heard of it are in Gearbox and also in Argent, and actually also in Instadapp too. How do you see, just not just for Gearbox, but do you see smart contracts wallets becoming more and more commonplace as Ethereum evolves in the future?
Good question. Without I think so, I guess. Yeah, I guess it's like using usual wallet. It's like technically complicated. Yeah, so not everyone can understand how it works. How to be sure that you don't track yourself. That don't need to put your seed phrase to Twitter and something like that. It's like not obvious for a lot of people, and I guess it's very hard to understand them only after losing a lot of money. That's maybe not a good choice. So yeah, I guess such kind of smart contract wallet will be like more popular in the near time, because like it's just could solve some questions for people who are not developers, who are not OG in DeFi and understand everything very well, how work in crypto. And just for original people, it's like much easier way to use some solution that allows them to interact with some limited number of options, but solve a lot of other security stuff.
Yeah, I agree. Yeah, go ahead.
Yeah, I don't know. Like once gas is sorted, then so if you think gas will be solved, like the cost of transactions will be solved by L2s, then I feel like smart contract wallets are inevitable, just because like the wallet experience right now is so bad, and it could be so much better. Like with smart contract wallets, you could have experiences that feels like a Web2 experience whilst being a Web3 experience. So like, why would we want that? I mean, I feel like it's inevitable.
Yeah,
as long
that's
as
probably-
transaction costs get solved, right?
Yeah, as long as that gets solved. And I feel like, not just between smart contract wallets and, hopefully like improvements in UI and UX, by the time the next bowl comes, all that will get sorted and we'll be able to onboard that many more new people into the space. But the question is, for those new onboarded people, do you see them using stuff like Gearbox? Do you see, maybe treasury managers or, people that specialize in actually using leverage, using Gearbox and let's say like someone can just build on top of Gearbox saying like, hey, I'm a manager, like give me your funds and like I'll manage it for you. Like, is that how you see it playing out in the future?
Yeah,
I mean, my take is.
yeah,
Sorry, go ahead, Ilgiz.
Yeah, okay. My thoughts here, it's like leverage not for everybody, yeah. So even if we check traditional markets, we can see that like not everybody use leverage or derivatives and so on. It's like more professional way, yeah. So I guess yeah, there will be some split between just simply traders or more sophisticated users, because like yeah, in leverage it's very easy to be wrecked, and of course it's like requires a little bit more research to using it. So yeah, I guess it's not for everyone, but still I guess it's like a very big user base for users who will be able to use leverage, understand how it works, and that could be different segments. It could be some professional users, more professional users. It could be some treasury management users. It could be some protocols who can actually use leverage to increase the revenue streams differently.
Got it.
Got it. And
What's the most
what are you gonna
popular
say,
strategy? Oh.
I was gonna say like, what was Amplice gonna say? Because I know he had an answer.
Oh, sure. So what I was gonna say is like more or less in line with what Ilgiz said. Like, I don't know if it's a good thing necessarily that like quote unquote retail is punting with 20x leverage on FTX. Like, is that a good outcome? I don't know. Like, should they be allowed to do it? Yes, absolutely, they should be allowed. But like, probably if like blockchain is going to be an important technology in like 10 years, probably we don't want like quote unquote retail to be like punting with high leverage on shitcoins, right? That's not the point of it. So in that sense, like as hopefully crypto becomes more and more mainstream, less and less normal users are using leverage, right? And to the extent that they are, they're using it through other products. So like I see Gearbox almost like the way you described it earlier, like going forward more and more, hopefully it's like middleware and the end user isn't even aware of its existence. And kind of, yeah, like hopefully a lot of the users are like larger players, like either super sophisticated degens who like really know what they're doing and want access to the leverage directly. And like, but hopefully most kind of normal users are doing it through some additional layer that's built on top of Gearbox that is, has good risk management so they don't get wrecked, basically.
Got it. Yeah. Every time I hear middleware or something like what Gearbox is to what Giotto is to automation, Gearbox is to leverage. Like the parallels are very apparent for me there.
Yeah, so I actually wanted to jump in and ask, what is the most popular strategy right now on Gearbox?
Good question. I guess actually Frax LP was like most popular strategies several years ago. Not checking today, but I guess still the same. Yeah, can check it. Yeah.
I'm looking at the Dune right now, and according to the Dune, the most popular strategy is the Urine Weth Vault, which is surprising because that means the APY must be higher than staked ETH right now.
Could you explain that to me, Amplice? What does that mean that they're in the Urine Weth Vault?
So, I mean, there's a Yearn strategy that's like the vanilla ETH strategy. And I don't know if the Dune that I'm looking at is fully updated, but if it is, hang on.
No, I
guess
guess
I can't really share.
I guess this is updated
Share a
data.
picture, yeah.
Like several
Yeah.
weeks, last several weeks, Yearn Vault has very high APIs. So I guess a lot of people just ape into it. and that's the reason why we have.
Yeah, I think it was 10% last week or something. So probably people
Wow.
aped into that.
Got it. And what are the fees like to use a credit account? Could you kind of run that through for me?
Fee from Gearbox, you mean?
Yes, the fees from Gearbox.
Okay. Actually, Gearbox has several sources of yield. First one, there is spread between borrow rate and supply rate. That's, I guess, also pretty similar for our compound, yeah. So also there is some spread. So this is one of the sources. And second source from liquidation side. If liquidation happens, protocols also get some fees. Yeah, I guess that's it.
And how does liquidation work in Gearbox? Is it like a haircut style, or is it like liquidity, or?
Okay. Liquidation don't require any kind of capital now, so it's like not capital intensive. You just need to understand what kind of operation should be done inside credit account to swap assets on it to underlying, pay back the debt, and so on. So it's like there is no need for liquidator to has any kind of capital or use flash loan because credit accounts already over collateralized. So there is no need for external capital to close position. So and when liquidator close credit account, he gets some liquidation premium, which actually like some constant fee applied to the value of assets that now holds on the credit account, and pay some liquidation fee to DAO, and that's it.
Yeah, I've noticed in the past 30 days, you've really seen a hockey stick in these fees. Your total fees is up. Do we have that chart? Hold on, the chart was here in earlier, but more than half the total fees of Gearbox have come in the past 30 days. 269K, over 462,000 total fees. Is that because of the recent market action with FTX and everything?
No.
Where do most of the, yeah.
Yeah, before 15 November, I guess, there was some withdrawal fee for pool side. The reasoning for that is like when pool's very small, it's very, very easy to move utilization, and it's dramatically increase borrow API, and actually makes everybody unhappy with that. So there was this withdrawal fee for LPs, 1% that will be removed. So I guess number of users just removed liquidity before that, and because of that, this number so increased. Yeah.
So actually, we taxed Sam, Alameda, Caroline, I guess. Caroline was in the LP pool with Alameda funds, and before, because obviously they were having a liquidity crunch, right? Before we removed the withdrawal fee, which was like widely publicized, we were going to remove the 1% fee as a part of the V2 launch, and we're just like doing the votes and DAO stuff necessary to get it done, right? Alameda withdrew before we stopped the withdrawal fee and like took the 1% hit, which paid us a bunch of fees. I don't remember how much they deposited, but it wasn't a small amount, anyways. Yeah. So
Uno reverse card.
Yeah, we're trying to make your money back, one withdrawal fee at a time.
That's awesome. So moving forward,
the protocol
you guys
of the
would
people.
not have. Got it. And moving forward, you guys would not have a withdrawal fee anymore. So it really comes down to spread plus liquidation.
Yep.
Correct.
Fees. I see. Got it. And I got a question here. And with the whole, um, Avi with the curve and the Ave, like
And the
bad debt
mango.
and the mango, prior activities. Like, is there any possibility that Gearbox would be left with like bad debt from a highly profitable trading strategies?
This one should be for Ilgiz. Oh, yeah.
Yeah, of course. So, of course, it's possible. Yeah. So we see different use cases before in DeFi. So when something goes wrong, different scenario can have a place. But of course, it's kind of responsibility of governance and responsibility of risk team to check and to understand what kind of parameters should be, what kind of assets can be added to the allowed list, so to mitigate such kind of risk. So, yeah, but technical, of course, it's possible. But if everything, I guess, chosen correctly, that should not happen.
Understood.
Got it.
Because the pool of assets are still well pulled together. These, even though it's a credit account, it's not an isolated pool position because you're still essentially drawing from the same pool of liquidity.
Yeah, of course, yeah. So you've got these funds from pool, and if for example health factor calculations are wrong on credit account, I mean not wrong, but for example some risk parameters calculated incorrectly and price of some token drops very fastly, then credit account can't pay back its debt, yeah, and it's for such a case it will be bad debt. But of course, it's responsibility of to understand what kind of risk here we have, to check liquidity on dexes, to be sure that case of CRV last week can happen. Yeah, if for example all your position could be liquidated, is it possible or not on dexes for existing market situation? And here we work with RiskDAO, who has like I guess one of the strongest team. From risk perspective in our space, and we have like built different tools like dashboards that allows us to check what kind of position in each protocol, in each asset we have, in which kind of pool, to see all the picture for all the protocol in the real time and have a right how to say, and this is help us to make a right choice and understand, maybe to change some parameters of the protocol before it's too late.
Got it. So you're saying it's almost like dynamically monitoring liquidity of the underlying collateral and adjusting the parameters of basically, what's available to borrow based on that liquidity. Dude, that should be like a basic for literally every protocol. I mean, I just want to double click back on what Amplice said earlier. If we assume that transaction fees are a solved problem, it's kind of alluding to L2s. Could we expect Gearbox to be on L2s in the future?
Good question. Actually, why not? I guess it's possible. The only question here, I guess, like main benefit of Gearbox when you have different opportunities to apply your capital, right? Because like we don't build some leveraging box. We just can apply it to different protocols. So to understand what kind of layer 2 we can go with, we should be sure that there are enough liquidity, enough protocols where Gearbox users can apply their leverage. Because like if this is some layer 2, there is no in which any activity any protocol deployed on it. So it's difficult to Gearbox to show its real usage here, because like we can't do anything if there is no initial usage of layer 2.
Could we see like a leveraged GLP pool in the future?
Sorry?
Could we see something like a leveraged GLP pool in the future?
Yeah, it's interesting actually. I just started searching GMX and GLP pools. It's very very interesting to understand how they work and how is it possible to implement in a easy way some integration for Gearbox. But yeah, it's something I guess unique and interesting that happens previous several months in DeFi space. So.
What is your take on GMX? Because we've had guests on in the past, I wouldn't call them grievances, but more say, GMX is riskier than, what people think. What is your take on GMX? Because it's obviously one of the more, if not the most successful protocol on any L2, in my opinion. They've been able to like leverage a huge community, get a huge, following. The real yield doesn't lie with the GLP token, but what is your take on GMX?
I think it's like a little bit hidden risk in GLP pools because it's very very sophisticated design and it's not obvious what happens for different scenarios, and I guess we can see some interesting insights here, like when Uniswap just launched, a lot of people don't understand what is impermanent loss, how it works, and GLP pool design, I guess it's also has some interesting tricky points that will be when people will understand it later after earning money or losing a little bit money.
Interesting. Yeah, it'll be interesting to see what happens because there's I don't know whatever happened on Avalanche like a few months ago, and then we'll see. I think the biggest question is how can GLP scale? Like, can it have the same model and still scale up into the future?
I'll add on GMX that, as long as their users continue to be shit traders and continue losing money, GLPs will do fine, right? And once their users start making money on their trades, which probably is never going to happen because they're all loser traders, then GLPs will start losing money. Like if GLPs are making money, somebody's losing money somewhere. So if you're GMX, if you're trading on GMX, like maybe think about what you're doing.
Yeah, it's funny because all exchanges are like this. All exchanges are just full of losers, just straight up.
Well, in an ideal world, right? Like half or maybe a little bit less than half of your traders on whatever exchange you are making money. Like let's say like 45% and 55% are losing, right? And the exchange is taking like a cut, right? Like in poker or whatever. Like the house takes a rake, and then it's like an almost fair game where you have a chance of making money and you have a chance of losing money. But according to the stats that I've seen, like the traders on GMX are just like straight up bad traders, and they don't know what they're doing and they're getting wrecked.
It's funny. I think there's this bias. It's like if you're on, L2, if you're on Arbitrum, you're obviously technically competent. You've probably been in DeFi and in crypto for a while, and you're probably more of a technical, maybe builder side, but that does not translate at all to being a good trader, and that's the problem. You probably have people like think that they're good traders because like, oh, I made it onto Arbitrum, like I got here, I must be like special, blah blah blah. But at the end of the day, you're just a shit trader. like just one thing doesn't equal the other thing.
Yeah, it's very strange to me.
Oh, what's strange? That people are just like keep deciding to lose money on GMX.
Well, yes, yeah. People look at if you're on Arbitrum, you surely must have seen these threads, right? About You know, how GMX traders are just the worst and keep losing money. And that's why GLP is so successful. And that's why GMX is doing so well, right? So like you must have seen these threads, and like what makes you think that, oh, you're going to be the one to buck the trend? I mean, like, guys, it's over, right? If Caroline and Sam aren't making money on their trade, nobody's making money on their trade.
Who made money this cycle? We're all just down bad.
Amplice is just spitting facts on the pod today.
Yeah. So like when the bull market comes back again, like, and everything's up only, you know, I know that's hard to imagine now. Like, how is GLP gonna fare in a up only environment and not in a crab environment or a down only environment? That's the real question.
What's more interesting to me is like, so GLP is what? BTC, ETH, and USD basically in an LP position, right? So like the GLP users could be quote unquote making money, but it might feel like they're not because they're down in BTC or they're down in ETH. And does that need to like losing a bunch of liquidity, which then affects the exchange? That kind of thing will be interesting to see what happens.
I'm not sure if that collective thought has, you know, gone into people's minds yet, because I feel like if you're like GOP is kind of, and GMX have kind of built this, you know, like I said, very strong following, and so they're probably all just around fees, we're going to make it back, blah, blah, blah. But I'm not sure if, you know, I feel like I think GMX did a good job of like building up that cult following, and they're in GOP and they're just staying in GOP. I mean, that's just my observation.
Yeah, I don't know. We'll see.
I don't know. We'll see. Speaking of other things in DeFi, where do you guys think DeFi goes from here? How do you guys think, you know, everything's playing out, especially after the FTX fallout? Where do you see, you know, the next narrative popping up?
I don't know what the next narrative will be, but it's probably going to be stupid, and I'm probably going to hate it. Maybe NFT finance or something. I don't know.
What was the narrative you hated most this past cycle?
It's got to be NFTs, right? Like apes, like the punks I can live with. Those apes are ugly and stupid and pointless.
Ugly, stupid, and pointless.
Like, if I don't understand, I'm not gonna get into it. I don't understand people who like look at that thing and think like, you know what, that's fucking cool. I want that. It's literally the lamest thing on the planet.
I feel you.
What's your favorite NFT, Amplice?
It's got to be Ghouls, right?
Ghouls, yeah.
You know why? Because they're at people's prices. They're cheap and they look good.
Yeah. You know, that's something I thought about NFTs too. Like with every, you know, increase in the price floor, you get, you know, a certain part of the community exiting and new people coming into the community with every, you know, different, you know, every increase or decrease. And I feel like with apes, you know, when it reached like a certain floor price and kind of went up only, it just became unbearable and they became the meme that they are today.
I don't know. I feel like apes are all fuckboys, right? Like Jimmy Fallon bought an ape. Didn't like Justin Bieber have one as well? This is the club that you're in. This is not the cool kids club. I don't understand it.
Yeah.
Man,
what about
people out like the umpire?
Yeah. Amplice, what else is on your mind? What else are you pissed off about in crypto?
I don't know. I found the whole FTX thing pretty funny. I mean, I get that people lost money and that's sad, but yeah, I don't know. Like the whole thing was kind of hilarious to me. It was fascinating to watching him like continue to meme his effective altruist stuff even after the fact. Like he's like shit posting to his friend, which they now posted on the internet, right? About how it's all fake. But then even after that, even after he gets caught out, he's still like pretending to be a good guy and like leaking these employee messages like it's nonsense. And I wonder how many. Oh, you know what else is cool is not SBF, Suzu turning Muslim. That's cool. That's a good. That's the next narrative.
I saw on DeFi Llama they have a section for halal finance for like their subject. They were like these are the halal protocols. I'm not sure if you guys saw that.
No, I didn't say it.
I did not, but that's bullish. I'm bullish on DeFi Llama. That's
Bullish on
Super
DeFi.
bullish.
Same
Yeah.
here. Yeah, no, with the whole SPF stuff, it's funny that you said like I'm a good guy, and like looking back at sushi, when that launched and seeing that Discord message of Chef Nomi saying I'm a good guy, and then seeing I'm fucked up and I'm sorry, like Chef Nomi's apology, and then seeing SPF's apology, there's definitely some involvement with that SPF and Alameda and sushi. Like I feel like there's no like smoking gun evidence, but it seems pretty clear. I'm not sure what you guys, looking back at that, like what you guys think.
I don't want to speculate on doxing people as in and on, but yeah, the language is quite similar, eh? I miss those days. Don't you miss those days? Those were the good old days.
I do miss those days.
I lost
everything was
a bunch of money in sushi.
so did I.
It's like I farmed it heavily at the beginning, sold the token for like next to nothing, then it pumped.
That's
then
exactly what happened to me.
And then I bought back
exactly...
in, and then it dropped back down. These are lessons learned, man. Lessons learned for the future.
Expensive lessons, but at least we have those memories to carry.
But the memes are good. There was like
memes are great.
There was this like excitement in the air that isn't around at the moment.
Yeah, I just felt like I've said this before. Through that bear market, just like wandering through the desert, and there's no hope. You don't see anything, and then all of a sudden, Comp has this like yield farming thing, and then it was off to the races from there. And it's just like waking up like, oh, what we farming, boys? and then it's just there was definitely a certain magic in the air back then that doesn't exist now at the moment. But will it come back again? I think it will come back again, but it's just hard to imagine like what form it will take. It's just a matter of sticking around.
Yeah. For real, to answer your question from earlier, for real, the next narrative, I think the next big narrative for crypto, and maybe this will take a couple of years, but it's ZK. Like zero knowledge stuff is going to solve a lot of the problems that we have in crypto.
What problems do you think it will solve?
So, like with ZK Tech, we're like on the cusp of solving the scalability trilemma, right? Because instead of right now, like every node needs to basically redo all the computation, right? So the whole idea of a blockchain is like everybody checks everything, so everybody's redoing all the computation, and that's why it's so expensive. So like if you do an ETH transaction and that broadcasts out to all the nodes, like each of those nodes is checking that transaction is valid, right? And the way that they check is that they basically redo the calculation. With ZK, instead of having to redo the computation, you can just do a proof. And so that basically means that instead of every node redoing the full calculation, you're doing like a very small, like much less computation to verify that something is valid. And that basically breaks open the scalability trilemma. So we can have, fast and secure and decentralized. That's going to change everything, right? Once we have that, then we have the ability to rival kind of Web 2 or whatever you want to call it, like in terms of speed and efficiency without having to compromise on decentralization. And I think that's what we need to be able to onboard kind of all of our moms or whatever. Like it needs to be not only like, in order to onboard like moms and grandmas, it needs to be not just better because it's decentralized, it needs to be better and more decentralized, like better in every way, and dominate the previous option. And I think potentially like ZK L2s will get us there.
Yeah, no, I agree. We can have our cake and eat it too with ZKs. We can, be efficient and be sovereign with ZKs, and I'm definitely really excited for that.
Yeah, and then the broader application of the tech is like potentially we have a chance to reclaim our privacy too, and like have the internet be what it was supposed to be instead of this fucking cesspit that it is right now, and that's kind of hopeful as well. I don't know if that will happen, but ZK allows it to happen, which is optimistic, I guess.
It opens the possibility.
Yep, exactly.
Speaking of ZKs, you have, things like Starkware pop up with Cairo, in like all these like new different languages. I mean, you have Fuel Labs, you have all these. Do you guys think that Solidity is the end game for for languages for Ethereum, or do you think there's a world where there's multiple languages and Ethereum is this consensus layer and all these different languages are on top? Maybe not all these different languages, but there's like a few select languages that are the execution languages that are just on top of Ethereum, which is this consensus layer.
I don't know if Mikhail, sorry, not Mikhail. I don't know if Ilgiz has takes. I have a take, which is, I think with the kind of L1 battles that we've seen in this previous cycle, right? Solidity and kind of EVM compatibility, or whatever you want to call it, was the thing, because basically, like, people just wanted to fork things, right? And the reason why people just
and find out,
the reason why people just wanted to fork things to BSC and Polygon and whatever, Phantom, et cetera, Avalanche, is because actually those other layer ones didn't present a better version of a blockchain. It's just different, right? So they're differently positioned on the centralization, like on the trilemma spectrum, right? They've chosen different points to be on that spectrum, but none of them are quote unquote better than Ethereum. So they might be faster, but they're less decentralized, blah, 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 right? And I think developers are drawn to Ethereum because it's the most decentralized. And so like the shit developers to develop on other shit chains, like they just want to fork things and make a bunch of money. But actually like there was not much innovation happening on any of those other chains. And that's why EVM compatibility was important, because people just wanted to fork things. And I guess the exception kind of was Solana, but I don't know too much about the Solana ecosystem. But with ZKs, right? So with ZK-L2s, the possibilities of what can be done on a ZK layer 2 are so vast that I think it will attract the best developers to do new and incredible things. So it won't be a case of like people just want to copy everything from L1 to L2s, because like these ZK L2s are going to be able to do things that you actually can't do on L1s, like entirely new, unimaginable things. So for example, like there's this guy called, I'm just going to randomly shout out a guy right now, but there's this guy called Guilty Gyoza who's like developing on Starknet, I guess, who's like, he's like calculating frame by frame for some kind of fighting game. These are just experimental things, I think, but he's like doing frame by frame calculations for some kind of fighting game, and everything is on chain. So like imagine Street Fighter and every frame of the animation, other than like generating the animated figures themselves, but like all the math behind those animations, like your hitboxes and all that stuff, all of that is on chain. That kind of thing is possible on a ZK L2, but not possible in a ZK EVM L2, if that makes sense, right? And so probably Solidity is not where it's going to be at. So there'll probably be ZK L2s where they are ZK EVMs, and then people just fork existing things plus build a couple of new things. But then I think there's going to be this other category of like ZK L2s, which abandon Solidity, abandon EVM compatibility, but in exchange, you have like the full power of computation, and you can do almost anything that you can imagine, like on computers right now, but on chain, if that makes sense. And like the possibility of that is so amazing that it will draw developers in, right? Exactly, it's a whole new world, and that will draw developers in, and therefore I think Solidity is not going to be it down the line.
Ooh, spicy. Ilgiz, I want to hear from you, man.
I think that what's matter here is like a number of devs, and if we check number of devs in different change in different languages, we can see that Solidity is like I don't know real percent number, but it's very high, yeah. So it's like 80-90% maybe, and I guess compete with such number of developers, it's very hard for any kind of other solution. And it's very difficult, even if you check on Web2 history use cases, we can see that changing language is very difficult. And even for large corporations that dominant in the market. And even with their market power, it's very difficult to give an option to build on other languages. And I guess it's like when there's several use cases in Web2, like with Apple, with Google, when they actually pushed devs to build on their own languages or own supported languages. And I guess if you don't see such kind of use cases when some big corporations come to the market and try to push and have very big budget on it to build everything from the scratch, it's very difficult to push people to choose this language. So I guess Solidity and maybe Viper still will be like market dominant in the our space. But I mean,
so we have differing opinions here. Yeah.
I might be biased. My partner is works for one of the ZK projects, so I have like a particular I have a particular bias here for that happening.
Yeah, someone that I used to work with started a ZK project, so I definitely developed my bias there, and also just people I've worked with in the past, super excited about Starkware and Cairo and like all the possibilities there. So I've been Stark pilled and ZK pilled for over a year now, and definitely understand what it's capable of, and like you said, it's impossible to imagine where it's going to lead and like what's going to be built because it just hasn't existed yet. And also, we're just so used to being in this, kind of frame of being Solidity, EVM only, that it's hard to imagine outside, what the world looks outside of it. But you can say the same thing about last cycle. It was hard to imagine, DeFi, the way it was. It was even hard to imagine NFTs blowing up the way they did. If you told me
still hard to imagine NFTs blowing up the way they did.
Yeah, if you told me like they would like, really like take the mainstream by storm, I wouldn't have believed you. And in like the way that it did in such in a dumb way, like but then again, I'm just like, oh, it is, when you see it play out, it's like, oh, it is what it is.
Yeah. I mean, hopefully ZK tech is as cool as I think it's gonna be.
Man, I mean, like for me, as much as I want to see all of these experimentation with OP, RB, Starknet, Starkware, ZK Sync, ZK EVM, ABC, XYZ, Gen Z, as much as I love all of that, I feel like, isn't liquidity going to be super fragmented, like across all of these things as everybody is experimenting? And
it already is.
It already is. And it's only going to get worse and worse. So, like, where do we go from there? And then liquidity begets liquidity, right? Like the power law is more real than anything but liquidity. So,
I mean, my hope is, like, yes, liquidity will be fragmented. Number one, if most L2s are using ETH as a base layer, right? Hopefully that makes bridging and all that stuff a lot easier and smoother than it might otherwise be with like a quote unquote multi-chain world. And that will allow liquidity to be quite nimble. And then the other thing is like, I'm seeing a world where more and more things are put on chain as it's possible to put more and more different kinds of things on chain. And hopefully that draws in more and more liquidity so that we're at the point where it doesn't matter if liquidity is fragmented because like all the liquidity in the world is on chain or something. I mean, like not literally that, but you know what I mean?
So you're saying there's going to be an abundance, and it doesn't matter if it's fragmented, if it's basically a trillion everywhere, anyways.
Right. So yeah, if like I don't know, half of or like 25% of like all financial transactions are on chain, then like it doesn't matter about like whether liquidity is fragmented or not, right?
Right.
I think there
How
will be
about
a
you,
bunch
Ilgiz?
of I think there will be a bunch of new kind of protocols, I don't know, solutions that could actually easily move liquidity from one chain to another. So I guess that could be automated in some way, so that liquidity will follow some rules from one chain to another, depending on what kind of preferences underlying users have. Yeah.
Right, because I was thinking, Ilgiz, like for something like Gearbox, you want to have as deep a liquidity on the supply side as possible. Like, I mean, pretty much any other protocol. But if you're specializing in leverage, like you want access to that liquidity no matter what. So, like, I would feel fragmented liquidity going cross-chain, L2, stuff like that. Would feel like you guys might have to build your own internal bridge system or some way, somehow, because there's no way as a, like, you know, you could bridge users' funds to basically Gearbox on Arbitrum, right?
No, yes. Yeah, maybe you're right, and that could be one of the options for the future development. Because, like, yeah, I can agree that bridging funds, for example, to Arbitrum, to Optimism, any other L2, it could be one of the options that, for example, liquidity providers can choose. Like, okay, it's acceptable for me to farm not only on Ethereum but also on some other layer tools, and please manage these funds like on protocol level, and that could be one of the options. Yeah.
Got it. No.
Yeah. What do you guys feel about, omni-chain layer zero stuff? Do you guys have thoughts about it? Do you not?
I'd say not thought about it very deeply, because like it's very very tricky stuff, I guess, and requires a lot of research. Because like most biggest hacks last year was from bridging stuff. Yeah. So it's like, I guess one of the riskiest part in our ecosystem, and of course it's very very security intensive solution should be here.
I was taught as a kid that if you don't have anything nice to say, don't say anything at all. So I'm going to refrain from commenting.
Fair.
No, I need some Amplice rants on Mondays. Come on. Let me hear it.
I have no comment on layer zero protocols, none at all.
Okay, fine.
Silence speaks louder than words.
Okay. Let's get back to Gearbox for a sec. Like, you guys launched basically late October-ish, and your TVL literally just went from 0 to 100. And like, could you walk me through, as the marketing growth person, how did that come about? What was your strategy? How does a protocol learn from that, and things of that nature?
Well, I'm not the one who puts together marketing strategy, so I can't really speak to that. There's a guy there's a Gearbox contributor called Mago Select who does a lot of the planning and strategy work, and all credit goes to him for that. I just make the memes and the videos. I like to think that the videos being dope helps, but honestly, I think it's more about so Gearbox V2 has gone through a phased launch, right? Where On the credit account side, you have to be a leverage, quote unquote, a leverage ninja to open a credit account, and there are some collateral minimums and things like that for security reasons at the moment. And I think that has helped us in terms of like, so if you need a minimum collateral size for security reasons, that means you need to attract a certain kind of person, right? To become leverage ninjas. And so having a large audience of these kinds of people, which Ivan definitely has, is really helpful. And then obviously having access to, I don't know if you guys know what Lobster DAO is, but Ivan is like the main admin in Lobster DAO. Those people are all like OG DeFi people. And so having that, not as a marketing avenue necessarily, because obviously like you're not supposed to show there, but like being able to talk about Gearbox and people knowing that Ivan is involved in Gearbox definitely helped getting a lot of those leverage ninjas in to the program and opening credit accounts. And then on the LP side, I think just having like pretty good yields, especially, you know, as we're in the bear market, has helped, right? Because I think yields have compressed a lot in a lot of protocols. But with credit accounts, because like leverage is built in and like you wouldn't open a credit account otherwise. You wanted to use leverage. There are people borrowing. So there's built-in demand for leverage, and when there's built-in demand for leverage, then you're going to have some yield because people are borrowing, and if you're lending to them, you'll make some money, right? And just I think just having like reasonable APYs, of course they're boosted right now by token incentives, but I think just having like reasonably decent APYs is a good marketing, quote unquote marketing, insofar as it's marketing. Is a good marketing ploy right now, especially since yields are down everywhere else.
Got it.
Oh, also if you want if you want a successful launch of your protocol, definitely hire me to make videos. That's the other thing I'd say.
How long have you been making videos and memes for?
Since DeFi summer. So everything I know how to do, I learned from Based Money.
Based. That's pretty
Yeah.
based.
Yeah, it was the best. Even though I lost a bunch of money there too, that was the best. That was the best DeFi summer project as far as I'm concerned.
I think they were definitely the closest to the culture in terms of, you know, I just remember those memes. They were just so fresh, the vaporwave and everything.
Yeah, so
the
good.
nostalgia. Yeah, trip down memory lane. Yeah. Yeah, how do you, you know, keep your pulse on the culture to make the videos and memes that you do?
I don't know. I spend too much time on Twitter, spend too much time on Telegram. But honestly, like the way that I feel about it is not like keeping my thumb in the culture. It's like I am the culture.
I am the culture.
You create the culture that you, and then if people respond to it, they respond to it. But like, just do whatever you think is fun, and like hope that people respond to it. I guess. Mm-hmm. Yeah.
Do what you think is cool. Create your own culture.
Yeah.
I believe Terrence
like,
McKenna said something like that.
Don't take any, like all of this is fucking nonsense. Like, think about what we're doing. It's all nonsense. Like, I mean, it's useful in some sense, but also like, look at the industry. It's a joke, right? Guy literally just scammed like $10 billion and he's not in jail. It's like, it's all a fucking scam. It's not that serious. Like, don't take it that seriously.
He's speaking at PitchBook in a few days.
Exactly.
Oh, yes, right.
You know,
On
and the
Wednesday,
gloves are
yeah.
of quote unquote. It still blows my mind how he's both not in prison and on top of that speaking at an event like
He's touring.
It's like, oh,
He's touring,
just,
bro.
you know, he just mixed up some funds. Like it's like no, he committed fraud and stole from millions of people. Like and you know, it's just amazing that you know. But then
yeah,
again,
so crypto is a joke because this guy was like from crypto, right? Like SBF was kind of, I mean, he's not really a crypto native. He doesn't really believe in this stuff, but Crypto's a joke. Like we had this guy scammed $10 billion out of our industry, and he's not in jail. But the world is even more a joke because the guy who deployed Tornado Cash is in jail, and SBF isn't. So like everything's a fucking scam.
Everything's a joke.
So,
Yeah, and on top, not
yeah.
just like crypto, but like all the institutions that invested in FTX, whether it was Sequoia or Tiger Global or the Ontario Teachers Pensions Fund, like no one checked, no one like took a deeper dive into it, especially when it went up to like 20 billion, $32 billion, and the fact that he just like kept on raising even though he had this cash cow, I don't know. There was definitely warning signs, but people just chose to ignore them since everyone was making money in an up-only environment.
Yeah. So yeah, I mean it's a scams all the way down from your government, like whatever government you have, down to you as an individual. It's all scams.
Yeah,
Um,
yeah, the real black pill right here. Do you have any, white pill thoughts or any white pill takes? Like, is there hope for a better world? Or is it all just one giant joke and has been a giant joke throughout history and will just continue to be a giant joke into the
I mean
future?
that is the white pill, right? The white pill is that it's a joke. The black pill is that like it's not even funny. Like if you take the scam seriously and you're like fucking getting mad that you're getting scammed, that's the black pill. And like if you take it in the way that like what's that guy's name? The Camus or whatever. I don't know how you pronounce that. I haven't read the book, but like he's like, oh, if you're Sisyphus and you're pushing the rock up the mountain every day, like you can approach it with a good attitude or you can approach it with a bad attitude, right? And the bad attitude is it if you approach it like Nietzsche does, and the good attitude is to be like, well, it's pretty funny to have to push this fucking boulder up a hill every day, and that's Camus. And so like that's really the only way to approach this shit, and that's the culture, yes. Well, that's what I think of as the culture. Don't take it too seriously.
Okay.
It's wise words, but you took the words out of my mouth.
What?
What were you gonna say, Kit?
I was going to say, paint me a picture of the most bullish case for crypto for me.
Yeah, give us that hopium. I just need it in my veins
Yeah,
right now in
the
these
most
trying times.
bullish case possible, please.
All right, Ilgiz, you want to go first?
Yeah. Let's get
See who
Ilgiz to go
can
first.
be more
Okay,
bullish.
Go ahead.
Oh, I said, what is the most bullish case you can paint for us for crypto?
Give us that hopium.
I don't know.
Give me something, Ilgiz. Come on. Okay, what is the most bullish case for Gearbox?
Like I guess when leverage can be applied for an DeFi protocol, right?
Unstoppable leverage.
Got it. Okay. All right. Amplice, you want to jump in and help the main man here?
So the most bullish case for Gearbox, I guess, is it becomes single source of leverage for every protocol that wants leverage involved in whatever they're doing, whether it's everything from Yearn to whatever shit coins people are pumping these days, and like nobody builds any more borrowing or lending because you can just do it with Gearbox, and it's so easy that you just like integrate it, and then you get approved by governance and you're in, and that's super bullish because it means my tokens will go up. For crypto, so the most bullish case to me is ZK Tech gets widely adopted. We solved the scalability trilemma. UX improves by like 100x, and we can finally like ditch MetaMask because it's a piece of shit, and they're stealing your information, which is bad. so UX gets much better, scalability is solved, and like a lot of things that are too expensive to put on chain, you can put on chain. We find a way to encourage like crypto, whether it's like DAI or LUSD or whatever, or whether it's ETH, but like we find a way to encourage people to accept it as payment, and that completes the cycle.
Frax's payment.
Yeah, sure. Yeah, Frax. Yeah, sorry. Totally missed that. Yeah. Frax, DAI, LUSD, anything but USDC basically is what I was thinking. Right. Because we don't want to, like, ideally we don't further entrench USDC in DeFi. Accept crypto as payment so that we can close this blockage off of like not being able to off-ramp and on-ramp things, right? If you can pay with crypto, then, and you can earn in crypto, then you can actually defect from fiat in some real way. And I think that at least gives you an opt-out to like government bullshit, which is very bullish in my opinion. And then ZK also allows us to reclaim our privacy so that all these Web2 companies stop spying on us. And Alex from Tornado Cash gets freed from jail. That's extremely bullish. And then your mom and your grandma start using, ETH to buy their groceries.
Love it.
All right. That's exactly what we needed on a Monday.
Right. Yeah. And I think on that note, we can go to the rapid fire questions. Kiet, I'll let you tee off with this one.
All right, I will. So, Ilgiz and Amplice, normally at the end of all these pods, we run a series of questions. And the first one I always start out with is, what was your first crypto virgin experience? When did you first touch the chain? But sexes don't count. Let's start with Ilgiz.
ICOs, I guess.
What was that?
Which ones? Which one? ICOs, which one?
Oh, ICO.
Oh. Actually, I don't remember. Falcon or Brave, maybe.
Wait, what? Dentacoin? What?
I think he said
Filecoin.
Filecoin. Oh,
Filecoin.
I remember that. Got it. Okay. Amplice, your turn. What was your virgin crypto experience?
So my first crypto experience was a business partner of mine shilling me ICOs and saying that we should do an ICO. And I was like, that's scamming. And he was like, yeah, but we can make a bunch of money. And then I quit that company, basically. But then he showed me ETH, and I was like, smart contracts totally make sense. And so I got myself a bag of ETH. That was my first crypto experience. Getting red-pilled on smart contracts.
Did you buy it on a SEX, or did you go off-chain and bought it on like Ether, Delta, or I forget what other ways to get it back then?
Bought it not on a SEX. I bought it like person to person.
Ooh,
I guess
counts,
that's
right?
on chain.
style.
Yeah, that counts.
Yeah, that's
that
on
counts.
chain.
That definitely counts. Yeah. That's some local Bitcoin action. Okay, and then second question to pair that: what is your favorite off-chain activity? What is your favorite touch grass activity? Let's start with Ilgiz.
You mean any activity or somehow related to Web3?
Yeah, hobbies, interests, whatever.
Anything outside of crypto.
Okay. Actually, love to play in tennis.
Tennis.
Tennis,
Yep.
my man.
Touch
Okay.
clay.
All right, Amplice.
I fucking love noodles. I'm obsessed with noodles.
Noodles.
I
Do
make
you
them.
remember
I eat them.
Do
I
you
spend my
remember
life
noodle?
dreaming about them.
Do you remember Noodle Protocol? The noodle fork? Yeah, I think it was a sushi fork called Noodle.
There was
Do you make them?
There was a fork early in DeFi summer called ramen, and it made me so mad because they mixed up tonkatsu and tonkatsu. Tonkatsu is the thick pork soup that you get in ramen, right? Tonkatsu is fried breaded pork cutlets, and they're totally different things. And this so-called ramen protocol,
Called.
like, mistook tonkatsu for tonkatsu, and it fucking drove me insane. And they scammed and exit. I think they exit scammed, so I was right about them.
Yeah, they can't get their ramen right.
Due diligence.
I don't know,
at
if
its
you're gonna
finest.
choose a theme, you gotta like do it diligently, you know? I don't know.
Yeah. Next question. So, what would be some advice you would give to yourself that's 5 years younger than this point?
Buy more ETH.
Buy more ETH. Yeah. What about you, Amplice?
Probably the same, honestly. Well, no, I would say get involved earlier. I think, I think whatever point in my life I heard about smart contracts, I would have been like, this makes sense. This is interesting. I'm going to get deeper into it. BTC never made sense to me because the economic model just doesn't make sense. Not to offend anybody. Well, fuck them. I don't care. But like smart contracts, just like it just clicked for me, and so I would have been like, oh, I should have learned about smart contracts much earlier and gotten involved much earlier.
Got it.
And then this is to wrap it up. Let's start with Amplice. What would you be doing professionally, career-wise, if you weren't in crypto?
So even before crypto, I was running my own business and doing remote work, basically. Like I was working fully remotely. I was doing like the nomad thing, traveling the world. So I'd probably still be doing that. Traveling is cool. So you can like find a way to make money without being chained to a desk in a specific location. You can like just travel around and see new places. I definitely recommend anybody who's like doesn't know what to do with their life to go do that. It's pretty cool.
And what about you, Ilgiz?
I don't know. Missed the question. Sorry.
If you weren't in crypto, what would you be doing for your career?
I think we'll be in banking, building some boring financial marketplace or something like that. Yeah.
Same shit. Different technology, same shit.
Well, in this case,
Right.
he's building an exciting, financial marketplace, not a
Yeah.
boring one.
Exactly. True. Yeah. And on that note, Ilgiz, Amplice, thanks so much for coming on. This was definitely entertaining. Amplice, I just want to hear more of your takes, just like all day.
I'd be happy to come back on anytime.
Yeah. Yeah. Thanks, guys.
Thank you, guys.
Appreciate
Thank you.
Cheers.
Thanks, everyone, for watching this episode of Flywheel Pod. We had the Gearbox guys on, and I have to say, Amplice is fucking hilarious. Like, I just want to bring Amplice on by himself, just to have him go off on all these different rants and all these different thoughts that he has on his mind.
Agreed. And I also love how, like, I think the team is very well balanced, right? You have folks like Ilgiz on there who's obviously much more technical, much more straight and direct to the answer. And then you have like Amplice on the other side to add like the culture and the color to it, which I thought was a really good balance. Bullish on the team.
Yeah. You know, Ilgiz is the nuts and bolts. It's, you know, the body. It gets the protocol working. But Amplice is the soul. Amplice is, you know, brings life to the protocol with his videos and his memes. And, you know, he's been in it for a while. He's been in since DeFi Summer, you know, starting off with a based and in that, you know, corner of DeFi. And, you know, it's cool to, what's cool is like something I said, you know, at Fraxgiving was 80% of anything's just like showing up and sticking around. And Amplice is just one of those people that showed up and stuck around and, you know, got an opportunity at Gearbox. And I think it says a lot. And whether it's like whether your talent's in more marketing or just more of a dev or somewhere in between, who knows? Like, you just stick around, opportunities will just show up.
Yeah, and just start contributing. That's what we did, right? We just planted a flag, called it Flywheel, and then here we are 6 months later.
Here, damn, it's been 6 months.
Oh, around there.
That went really fast. That went June to November. That is 6 months. Jesus Christ, that is really fast. Damn. Cheers to another 6 months. Let's get we're at 1.2 subscribers. Let's double that. Let's double that to 2.4 subscribers. Let's get that to 10K subscribers. So hit that subscribe button. Don't forget to hit those bell notifications, like, comment on our YouTube. Keep up with us on Twitter. Follow us there at Flywheelpod. Join our Telegram group at Flywheelpod. You can follow me on Twitter at DeFi Dave 22.
You can follow me at 0xcapital_K.
And we'll see you next week.
Peace.
Everything said on this episode is not financial or tax advice. This channel is strictly for educational purposes and is not an investment advice or solicitation to buy or sell any assets or to make any financial decisions. This video is not tax advice whatsoever. Please talk to your accountant and do your own research.